Morning, Steve Ray in Chicago with the morning grind comments. Well, it's Friday. Overnight, volume was pretty low. Prices are about unchanged, maybe a little bit better. Crude oil is lower. Yesterday we saw when the crude oil market rallied, it kind of followed some of the markets, and then when it broke, the market followed it too. So we're kind of linked, I guess, in some of these outside market influences as we await more harvest results, USDA's October 12th report, and the South American weather. As far as South American weather is concerned, there's not a lot of change. The next 2 weeks should be dry across northern Brazil, wet southern Brazil, wet in northern Argentina. Argentina's got about 17% of their corn crop planted versus 27 average and last year. Some people think that if this weather pattern were to continue, we could actually see a little bit lower corn acres in Brazil and Argentina, and they might plant a few more bean acres. I doubt if that really helps the corn market, but it could offer some resistance to the beans. We also noted that markets talking about that 2017 trading range in corn and beans has been the smallest in the growing season in over a decade. It's also interesting to note that the fund's still long a little beans. They are short corn and wheat, and for November beans, today starts the index fund roll, which they're long about 85,000 beans. On the other side of the equation will be the commercial short rolling out of their positions into the Jan or March. So when we take a look at the technical side of the marketplace, in the beans, we're right in the midpoint of what we consider the range over the last few years. $9 bean seems to be the low, $10 seems to be the high. Since September 1st, open interest has been going up, which could mean some new spec buying and some new China buying. Market's a little bit oversold, but again, the volume is on the low side over the last year or so. In the corn, we're trying to find support near contract lows. Also, since September 1, open interest is going up, and some of the highest open interest that we've seen in the last year. So the funds are trying to protect their short position, and the volume continues to be on the low side. And as far as the wheat is concerned, we're trying to bounce off contract lows. We failed at the 460 area in the December. We're backing off. Starting to see a little bit of increase in open interest, which means new spec fund short positions. Volume continues to be low. The market's starting to become a little bit oversold. So again, we're waiting for the October 12th report. South American weather, yields coming out of the Midwest, and it looks like for right now the yields support the USDA September numbers, which could be a little negative to prices. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.